Good morning, everyone. I know I'm jumping on a little bit early here, but I'm sitting outside at Clipsy Bay at the moment and it is absolutely freezing. So I thought I'd jump on. I'm out here at the moment because I've got an open home at 20 Poinciana Place. So I thought I'd take a moment and go through the 6 months we've just gone through in real estate, answer a few questions. And if there are any specific questions, just put them in the comments below. And at the end, I'll answer all of the ones that show up. If I do miss any, I'll definitely comment below and reply to any questions you might have. So this video has got a few different topics. We're going to talk about the conditions of the market so far for the first 6 months of 2022. We're going to talk about the media and if they're causing any unnecessary fear in the marketplace for both buyers and sellers at the moment. What to do if you're thinking of selling, where this is going to sit at the moment, if you are a seller who's been holding off, waiting for the peak, or trying to work out now that the market's shifted, how to make that work for you. We're going to talk about Pimpama and Jake as well, because of course that's my specialty areas. We're going to talk about the stats for the first 6 months and what that looks like for the remaining 6 months, not just for those areas, but I'll give some sort of predictions as to where I believe it's going to sit for the remainder of the year. And then of course, as I said, I'll answer any questions that come in the comments below right at the very end. Hopefully you guys can hear me. If there's any issues at any points, please let me know and we'll jump on from there. So let's talk about the market conditions so far in 2022. Now, it's been quite a roller coaster ride for the start of this year. January, of course, after the Christmas, they opened up the borders. January and February were arguably the biggest 2 months of the whole COVID boom period, in my personal opinion. We had the most amount of inquiries I've ever seen on properties and some absolutely amazing prices. One specifically, so a really good example of what that did, 14 Poinciana Place that I sold. Of course, that was on the market towards the end of last year with another agent, and the top offer they got was $2,025,000. In January, we relaunched it, had a little bit of a different marketing tactic, but with the amount of inquiries we had and offers, we managed to generate a sale of $2.1 million. So from December, when that came off the market, to January, there was a $75,000 increase just on that one property. So that first 2 months was absolutely astronomical. Then we started to see through March and April, obviously we had a lot going on, but the market started to slow. Buyers started to get a little bit hesitant. A lot of them were getting really remorseful about what they've had to go through. They've obviously lost properties to competition, usually by tens of thousands of dollars, if not by very small margins, and they started to dip away a little bit. Obviously we had things like the election call, which ended up in a change of government. We had floods, we had everything going on, obviously the war overseas, and now we've got things like interest rate rises and increased costs of living, from groceries to fuel to all of these different things that are now playing a part. And very, very, very quickly we noticed that things have changed. So probably there in that March, April, we started noticing a slowdown, but prices were still good. There was still very little stock on the market, so we were doing okay. Then we sort of got to the first interest rate rise, and that 25 basis point rise, although not a lot now that we look at it in the scheme of things hit a wall. They just came to a complete stop. There was almost like a shock that this has happened. And of course, there's many people in that position that were shocked. We were told that 2023 was going to be the earliest we'll see an interest rate rise, but no one predicted it to happen so early and so quickly. So a lot of people got shocked. They took their hands away and they went, let's just reassess and work out what this is going to do. Then we started to see that people started to come back in. They were getting more comfortable again. It was still very low interest rates at 0.35, I think we went to first. And then bam, 50 basis points. And now bam, again, another 50 basis points. And we know that that's more than likely going to be a trend following suit. And straight away, we've noticed an absolute change in who's holding the power in the marketplace at the moment. And of course, that means that buyers have got a lot more to select from in many markets, not all markets. I know that places like Calypso Bay has had an increase in stock sitting on the market, same as even Pimpama has had an increase of stock, whereas anything below $1 million seems to be moving a lot better. If you're looking in the luxury market, you'll find there's been a bit of a slowdown there. Ultra luxury, different ballgame. That's a whole different kettle of fish. But I think what we're going to see is that continue from here. I mean, in my personal opinion, I don't see any reason why you'd stop buying properties. If you really want to get into the property market, to be fair, I see no better opportunity. But that's me talking as a real estate agent, and some people may disagree with that. But if we look at a trend, so obviously the real estate market does this, slowly goes up, comes back down over time. And you just got to look back through history and see that. During the GFC, I've spoken about this before, it obviously hit really, really hard, and then it bottomed out for about 4 years before we hit that same level. And of course, it's increased since then. So if we're at this period here on its way down and there's still a little bit to drop, you're never going to be able to pick that drop. You're never going to know when we've hit the bottom until it's back up to where it is right now. So there's no point trying to time it. We know that if it's going to get low, it'll probably take 4 years. It will back up to where we were during the COVID times, which means everyone's going to do fine in property. But obviously, what's on everyone's minds at the moment is interest rates and repayments. What is that going to do for you? And is that going to change any lifestyle decisions that you're going to make? Because let's face it, property is a lifestyle transaction. It always has been, always will be. You have to buy or you have to sell for any reasons. Work, interest rate rises, living expenses, changes in marital status. There's so many different things that will never change. But the one thing that's really, really frustrating, I'm sure most real estate agents that jump on and watch this would agree, is that the media is hyping this up to be much worse than more than likely what it's going to be, but than what it is right now. You go onto Facebook at the moment, or you jump on 9 News or whatever it is. I don't listen to it very often, but I jump on Facebook and it's there, instantly there. Every single article is now about the boom to bust market or the incoming global recession or something that's scaring people and making them feel as though they need to wait. Or whether it's wait to buy or wait to sell. The media is telling them, hold on, things are bad. Things are really bad. They're going to get really bad. And I think that's now what's actually caused this slowdown in the market is not necessarily the interest rate rises and what's going on in the world. It's the media telling people how bad it is. And majority of us are designed or built this way that we've got to listen to the media because they're always right. Right? This is the way that the world is at the moment. The media are the people that are coming out and telling us what we need to hear. But what we're finding is people are listening to them before talking to professionals in the fields like mortgage brokers, like real estate agents, property valuers that are on the front line and seeing exactly what's happening. You can even just take a step back from property and talk to car dealers. People selling cars at the moment, they're probably busier than they ever have been. And that's probably a sign that things aren't as bad as what the media is telling them. People don't buy cars if they're struggling financially. It's not something that, a lot of businesses do require it, but majority of the time, it's a luxury item. A brand new car is a big thing. People are waiting up to 18 months for cars at the moment. It's phenomenal stuff. So yes, we've seen a slowdown in the property market. Yes, the media is causing unnecessary fear, in my opinion. They're not providing the full facts and they're not providing informative information so that people can actually make good choices, but they're just scaring people, and that's obviously what's affecting things at the moment. You may disagree, and if you do, let me know, but that's my personal opinion. That's the way that I've been looking at it. I reckon if the media was shut down for a week, you'd probably find that the market would continue as normal. We'd have a lot more buyers coming back into the market, whereas right now, they're all just sitting on their hands and waiting for the drop, okay? So what does that mean if you're a seller? What do you do right now if you're thinking of selling, but you've been hearing all these things from the media or from real estate agents that are telling you what's happening in the market? What do you even need to do? Now, I like to break selling down into a decision basis. So why are you selling, right? If you're selling for financial reasons because you're struggling with repayments, or you need to make a big lifestyle decision because this house is no longer suitable, then no matter what the market is doing, there's never the perfect time to sell. The perfect time to sell is when it's suitable to you and your lifestyle. The way that you need to look at selling is who's going to sell the home and how do you maximize the result based on what is happening in the marketplace right now, which I'll cover off in just a minute. The other side of that is if you're selling for greed, right? You've seen the market's peaked, you're worried about missing out, you're hoping to time it so you can buy back in at the bottom. That is a whole nother kettle of fish, and that's definitely where you need to get an agent involved straight away and find out, one, if you've already missed the market, two, if it's even worth doing for you guys, and then of course if that price you've still got in your mind as to where you think the peak is, whether it's still suitable. Because to be completely honest, the majority of the markets on the Gold Coast, the peak happened 4 to 5 months ago. We've completely missed it. Even us real estate agents, none of us picked that was going to be it and then drop. A lot of us are in the exact same boat, right? We're all trying to work out what we do now. I'm personally believing that holding onto property for the next 5 years, for me, is going to be the best way if I was an investor, right? But if you're looking to make some money out of property, you've probably got the next 2 months to take advantage of things. Hold on, buy later. Sell now, buy later, if you're in that position. But if you're just looking to get into a home right now, if you're a buyer and you're not looking to make money in the next 12 months and flip it and move on, there are still ways of doing that in this market. But if you're looking for a 4 to 5 year home to live in, who cares? We've just explained the GFC, which is the global financial crisis. We don't really get much worse than that. It only took 4 years before we were at the same price levels, and then it started to increase. So look at it that way, not look at it as how do I put money in my pocket now? What if it drops 5%? Oh no. If you're in a financial position where the interest rate rises don't affect you, you can lock in your rates. Whatever it is that you do, look at it that way, not from an instant cash gratification basis, right? So if you are looking at selling, obviously we've got ways, no matter what the market, to sell a home. Yes, days of market might increase, but at All Properties Group anyway, we find that if we use the right strategies, properties are still selling just as fast, and we're still able to get premium prices, So, number one, of course, find an agent. Chat to 2 or 3 local agents if you haven't got one that you've used before or you've got a relationship with, and get some opinions on price. Now, there's going to be, probably in my opinion, 2 to 3 different prices you're going to get. You're going to get the I want to win your business price, which is where we'll sit in front of you and overinflate your expectations to try and get you to sign with us before we provide the market feedback from actual buyers and start lowering your price from there. 2, you're going to get honest feedback. You're going to get an agent, which is basically what I'm doing at the moment, telling you exactly what is happening in this marketplace and allowing you to understand that we can try for a certain price, but the market may not agree with us, and to understand it from there. And then number 3, you're going to have a guess. You can have an agent that probably has no idea about what's going on in the market, haven't sold many properties, haven't really got the information available. They've looked at a few comparable sales and gone, I think it's going to sit here. Now you've got to work out if there's a big difference, who's telling you the truth, which is more than likely going to be the way you should go, who's trying to win your business and more than likely not working in your best favor, and who's just taking a stab in the dark, which doesn't necessarily mean they're not the agent for you. It just means that they might not be providing the best information to get you sold. All right. Now, once you've got that information, then number 2 is you've got to look for their process, because in any market, process is what sells. If they're still running the same process as they were during the COVID boom times, where literally a lot of these agents were taking photos on their phones, chucking it up on realestate.com with a basic advert, and people were just calling and saying, I'll give you this, and the deal was done. That's no longer effective. Things like building and pest now are a big thing with buyers. We're noticing already that we're getting deals across the line and then coming to building and pest. And before, when there were issues, as agents, we could literally just tell a buyer, I'm sorry, but there's nothing really we're going to be able to do here, because if you're not happy, there's 15 other buyers waiting in the background that will take it as it is. Now we don't have that luxury as real estate agents, and a lot of them haven't been used to negotiating in a situation like this. And we've got to start peeling it back. And a lot of the time, the buyers are holding the power now. So sellers, if you're in a position before you hit the market to go through and do a building and pest beforehand and fix those issues that we know will come up, you're in a much better position so that when you sign a contract, then you do your building and pest, that's where the price should stay. There should be no need for a price reduction, but just keep that in the back of your mind. But if you're talking to them about process and they've peeled things back because costs are obviously quite high at the moment in real estate, and they're worried about overcommitting, and they're doing things like basic photos, or they're not doing videography anymore, or they've taken social media out of their arsenal because there's no longer a reason for them to do it, they're probably not the right agent for you. I mean, you've got to look at it. Our job, and I've always looked at real estate like this, if you've watched a couple of my videos, is that we're not just salespeople, we're marketers. We're professional marketers that have to put your home in front of the maximum amount of buyers we can, sift out the ones that are serious, and hopefully end up with more offers than what we would before to create that premium price. Think about the process before you get to the point of talking commissions. Think about it that way. Obviously, if you then got your own work you've got to do, presentation, declutter, get everything ready, put some grass down if there's no grass out the back, clean up if the house is a bit dirty, if you've got investors that have just moved out and you're looking at selling your investment property, replace the carpet, do some painting, refreshen up as best as you can, so that when you hit the market, buyers are coming through. They're emotional because hopefully the marketing has done its job. They're emotional before they get there. When they walk in, everything aligns and nothing turns them to a negative buyer, which reduces their price expectations when they place an offer. Pricing strategy is going to be a big thing as well. We're finding now that during COVID, the no price strategy was working completely fine. Auctions were working great. But around the Gold Coast, I'm already noticing if you do not have a price, buyers are scrolling straight past, or they're no longer providing their phone number for us to get in touch and actually talk to a buyer and potentially bring them through your home. So I think it's important now, more than ever, to have a price on your home. Price it in a way that's going to appeal to buyers. It's a buyer excite price. It's not the price that you have to accept, but the buyer excite price, which means that, for example, we've got a Pimpama property that we've just marketed at $699,000 plus. That excited buyers, but it ended up going for well over $40,000 more than that by the time we had 11 offers 5 days on the market, because we used a buyer excite price strategy, and then we raised their expectations throughout that process. If you're looking to start high, slowly work your way down, by the time you've reached a price that excites buyers, they're probably at their ceiling anyway, and they'll offer less. And we've noticed that already with a lot of sellers that haven't quite been ready to meet the market. So just keep that in the back of your mind as well. Right, let's have a chat really quickly about Pimpama and Jacobs Well. Now, these two markets for the first 6 months probably saw the biggest price growth they've ever seen the entire time they've been around, to be fair. Jacobs Well especially went absolutely berserk, right? Calypso Bay had a really good run as well. Probably not quite the same run as they had outside of Calypso Bay, as Calypso Bay became unaffordable for many. Land prices in the area went from $875 late last year to $935 to $1.1 million. Now they're sitting at $1.32 million for a block of waterfront land in a good position, no pontoon within the estate, and they're selling really well. And that's probably a really good sign of what's to come for the Calypso Bay estate. Jacobs Well has had a lot of development interest over the last 6 months as well, and we're starting to see DA applications coming through to split blocks and get everything ready for when things really start to take off out here as the Coomera Connector comes out and further infrastructure. But for the first 6 months, Jacobs Well, there was 40 houses sold, which is on par for the 6 months of the end of last year. We sold, I think, 2 or 3 less for the first 6 months. Median price of $980,000. Now that median price is overinflated. There was a sale in Calypso Bay of $4.15 million in there, which definitely brought it up. That's never been done before, and there's not many properties around at the moment in the estate that's going to continue to keep that price point. But that really lifted us right at the end of the first 6 months of this year. The lowest sale in Jacobs Well was $592,000, and that was on the main road on Stapleton Jacobs Well Road, a little 2-bedroom, basically beach shack right down the road from the boat ramp, which is really, really good. We saw January, February, as I said, was really big in Jacobs Well. 10 sales both months, so 20 sales for the first 2 months, and then it dropped off. 4 sales, 7 sales, 4 sales, and so far reported there's been 5 in June. That might be inaccurate at this stage, which all depends on when we did this report. Calypso Bay had 17 of those 40 sales at an average or median of 1.9 million. Again, overinflated. That was sitting around that 1.6 million before we had that $4 million sale go through in June. But we're predicting that median is probably about where this estate's going to have to sit. I mean, during the GFC, things got pretty tough out here before all the developments came to Pimpama, to Ormo, to all the surrounding areas. I think now with the changes, there's simply no waterfront land available for people to go to, so they're going to have to, if there's land available, come by here. But I'm aware there's only, I think it's less than 20 blocks within the estate on waterfront land that'll be available until I think the end of 2024. So there's a really big lack of supply, which is absolutely fantastic. Although we are noticing, and I'm noticing it very quickly, I believe in total honesty and providing the facts, and a lot of properties have been hitting the market within the estate at an overinflated price. Unfortunately, they've missed the peak. Right, we're starting to see those prices dropping in here back to what fair market value is, and once they do that, they're getting eaten up by the marketplace. 16 Poinciana Place, great example of a buyer excite price. We hit the market. I put no price on this one, but we were guiding 2.6 million plus. Within 3 days, we found the perfect buyer, and it sold for 2.7 million. While other properties on the same street were sitting on the market for 60 to 90 days because they've started here and they're working their way down. Before they've reached the buyer excite price, they're too far down the list. Keep that in mind again. So again, we saw the same thing in Calypso Bay, 5 sales each for January, February, and then we had 2, 1, and 2 on average sales per month from there. So we really did start to see that dip. Obviously, if you are in Calypso Bay and you are looking at selling, there's things you've got to understand at the moment as a seller, that there's a lot more stock on the market now that has been sitting there. There's not a lot of new stock for a little while, and that's starting to affect buyers' expectations or buyers' thoughts, I guess, on the estate. So if you're one of those sellers that have been sitting on the market for a little while, either have that discussion about moving on or reducing your price to a buyer excite price, and that's going to get the buyers back into the estate again. We're still finding Interstate is our #1 buyer in Calypso Bay, which is fantastic. People are moving up here looking at Hope Island, Sanctuary Cove and going far out, $4 million, when they can get the same thing in Calypso Bay for a couple million. So keep that in the back of your minds. Pimpama, again, a really, really good story here. We've obviously got Pimpama, and I specialise in the Gainsborough Greens estate in there. For the first 6 months of this year, Pimpama had 196 houses sold, which is an absolutely great result, and a median of 689,000. Going back 3-4 years ago, the median was sitting in the 400s. 400,000 median for the whole of Pimpama, which has about 9,000 houses in it. We're now at nearly 700,000. And yes, although there's been a slowdown in the upper end of the market, that lower end, that $600,000 to $800,000 market, we're finding is still doing quite well. So I predict that median for Pimpama is probably actually going to lift, which is going to be really, really good. Gainsborough Greens, of course, January, February were absolutely astronomical. We had a lot of $1 million sales that was sold at both auction and private treaty for that first 2 months, simply due to a lot of interstate and international buyer interest, which has been really, really good. For the first 6 months of this year, there was 48 houses sold in Gainsborough Greens, which is a lot less than what there were for the last 6 months of last year, and that was because of the drop towards the end of start of this financial year. $890,000 median house price. We're creeping on our way to $1 million median sale. But what I've found watching all the sales over the last couple of months is that there's been almost a 10% drop for properties sitting above $1 million within the Gainsborough Greens estate, which means that the lower end is still doing fine, but those people that were paying $1 to $1.6 million in Gainsborough Greens 6 months ago, buyers aren't quite seeing that same value for every property. There's some amazing homes that have been hitting the market recently, selling for some great prices, but every single one has had a reduction into where they would have sat 4 or 5 months ago, and that's simply based on the facts. And then if you've got an argument for that, again, put them in the comments or send me a message. I'm happy to chat to you about it from there. One thing that's still performing, Pimpama acreage, there's been bugger all sales. I mean, I think I've only seen 5 or 6 acreage properties sold in Pimpama for the first 6 months, and right now I think there's maybe 2 on the market, so there's not a lot to choose from, which is really, really going to be quite good. Now, 6 months from now, where are we going to be sitting? Are we having this conversation again at the start of January next year, and what is it going to look like? To be fair, I think we're almost at the point where prices will start to plateau. I don't think we're going to have a massive drop from here unless the interest rates go up another 4 or 5%, which I just don't think will happen. I think people are now starting to condition themselves and understand that interest rates are going to rise, and they're predicting that and they're allowing for that now. So they're getting used to it. It's just the way that it is. What we're going to find is that we're going to probably hit the bottom, I believe, somewhere around that peak selling period, September, October, November, where sellers have had a break during winter and they start hitting the market and the stock levels increase. That is, of course, supply and demand becomes the issue there. And then after that, I think we'll probably just sit flat, right? But I'm not sure that that's going to happen. Obviously, no one predicted that COVID would double prices either. But from what I'm seeing, I reckon that's probably going to what's happened. We'll plateau for the next couple of years. But the big thing with the Gold Coast versus the likes of Sydney and Melbourne, who's probably going to get hit a lot harder, is that we've got a lot going for us at the moment. We've got amazing living standards, a very, very low jobless rate, which is awesome. We've got things like the Olympics that are going to start ramping up their construction values, and all of the jobs are going to come with that. A lot of infrastructure happening with the Coomera Connector, the Gold Coast Light Rail. Up on the northern Gold Coast, we've got the likes of Costco getting built, which is going to be a massive boost for retail workers as well. There's a lot of things that are happening to the Gold Coast, especially on the northern sector, that I think is going to hold that steady without that huge drop they're probably going to see in the likes of Sydney and Melbourne, in my opinion. And then we're going to take a few years and we'll come back up, right? I just don't see that that's going to change, and history should repeat, in my opinion, unless a world war starts, which, who knows these days, but it is post-COVID, anything can happen. But I just don't see, anything major that's going to cause these huge media-driven 30 to 40% price drops in the market. I think that if that was going to happen, we probably would have seen it by now, and that's my personal opinion. So, I'm not sure if my comments things are working, so there may be no questions, I'm not 100% sure. But if there are, please, at any point, send me a message, put them in the comments below. If you are in Jacobswell or Pimpama and you're not on my email system, I sent out a really, really detailed report about what has happened for the first 6 months of this year, and I send them out every month to keep you posted. Get in touch if you want to get added to that system, and I can send them through to you every single month. If you are considering selling, you're looking for someone that's completely honest about what's going on in the market and some really honest advice on processes to ensure you sell no matter what market changes come, 0407 760435 is my number. I'm available anytime, day or night. Send me a text or give me a call. Happy to chat. Beautiful weather today. Get out there. Have a great weekend. We'll talk to you soon.